So when we launched this fund, we did some market survey and realized that there's a gap. So there were funds for long-term investing, which are only long only. There were funds for special sets, only in terms of targeting a certain IRR. And there were funds which were for unlisted, which were primarily focused on unlisted equity, but they had lock-ins and they were huge gestation periods. So there was no fund which talks about which can combine these three into one at the beginning. So we targeted that, and at the end of the day, we launched a Swyom India Alpha Fund in September 23. So this fund takes care of in terms of long-term investing. This fund takes care of special situations. This fund takes care of the unlisted equity in the market.
Hello, my name is Vikas Agarwal and I am the founder of AIF and PMS Experts India. What we have observed is that there are more than 90% of the viewers in our YouTube channel who have watched our video and have been watching our video continuously at the regular intervals, but have not yet subscribed to our channel. So my submission to all of you is that please subscribe to our channel so that we can reach out to more individuals like you and spread the awareness about the whole investing game. Thank you so much.
Hi everyone. First of all, thanks for giving your valuable time to us and joining over this call from your busy schedule. So we at AIF PMS Experts India, we are thrilled to announce and introduce our brand new show, which is Ask the Expert Show. Through webinars, we aim to share insights into diverse asset classes, forecasting knowledge, exchange amongst our investor community. So my name is Devanshu Bindlish and I am the Vice President of AIF PMS Experts India. With me, I have a speaker, Mr. Radha Raman Agarwal ji, who is MD and CEO of Swyom Advisors. So welcome, Radha Raman ji.
Thank you, Devanshu.
So before we proceed with our webinar today, let me take a moment and introduce Mr. Radha Raman Agarwal ji. So Radha Raman Agarwal ji is a rank holder chartered accountant and a seasoned finance professionals with 20 years of managerial experience in leading corporates like Asian Paints and Pidilite. As the managing director and CEO of Swyom Advisors Limited, he has been instrumental in shaping the firm investment philosophies and driving the growth in the alternative investment space. With deep expertise spanning finance, supply chain, margin management, mergers and acquisition, and treasury, Raman has built a strong foundation in managing high-performing businesses. His strategic vision and proprietary investment framework provides Swyom with a distinct competitive edge in identifying and capitalizing on high growth early stage businesses. Hi Radha Raman sir, welcome to AIF PMS Experts India and Ask the Expert Show.
Thank you, Devanshu. Thank you for the nice introduction, and thank you for the AIF and PMS expert team also for hosting us, and thank you all the participants who take the valuable time out and come and attend the show. And I would also like to thank the entire team of PMS AF experts also, so for hosting the show and also in enlightening the audience in terms of getting the information about AF. Thank you very much.
Yeah.
Yes, Devanshu.
Yeah. Raman sir. So the format of the show is very simple. If you can throw your lights on your product, that what kind of product you drive with yourself, that would be a great help. And later on, after that presentation, we will take questions from our investor community who are with us today right now.
Yeah, thanks Devanshu. Good evening everyone. I would like to take you through the entire fund what we run, Swyom India Alpha Fund, and this is a maiden fund for our company. Just to give an introduction, we run an AIF and PMS. Before we start, I would like to cover the Swyom India Alpha Fund AIF today, in this evening today, and what we would like to also brief you in terms of how the AIF industry has moved. So by and large, starting in 2012-13, the AIF industry has gone very strong. Overall, 1.83 lakh crores of commitments have come only in the Cat 3 AIF, and overall, this 12.5 lakh crore which has come in the AIF commitments. So broadly, the industry has swelled. Industry has done very well. And today, what we'll do, we'll also cover that how Swyom got formed, why Swyom, and what we are doing at Swyom. So let me give a history. I think Devanshu pointed it out to me in terms of how we have formed. I worked in Asian Paints and Pidilite for almost 20 years, worked in those two businesses. And the idea of forming Swyom was that we bring in business acumen, and we also try to bring in the knowledge from the industry to bring a product for our clients. So that is something what we started the genesis. So we got in a bunch of professionals coming in both from the industry and business and forming this company, making sure that we create wealth for our investors. That's the basic principle what we are trying to do. During the course of presentation, in fact, we'll be discussing with you what areas, what we cover, how do we cover, what's our USP. By and large, we also run a PMS. We have a corporate advisory business. Today, I'll be focusing more on the AIF side of the business. One of the key things in terms of what we drive is our passion for equity and understanding of the businesses. Well, that's very, very important to create wealth and understand the metrics for investment for our clients. That's very, very important for all of us. Let me tell you what happened in terms of what strategies you're using and then how it has shaped up for us. Last year, 2024, Swyom Advisors were ranked number 2. So this was primarily among all the category 3 AIFs. The annual returns is 58.41. And in due course of our presentation, I'll also be discussing with you how that fund has come in, how the returns we have delivered, what are the key strategies, and how do we like to perform way forward. See, if you look at this, got covered in money control. This was part of the PMS strategy as well. We'll take this up during our course of the presentation. So this is a very key slide, what you like to cover. What are the guiding principles? Before that, how markets have behaved. If you look at, there was a short-term correction for the last 5-6 months. Nifties are getting into average P of 5 years on the lower band. So effectively, it's a good time to invest. And from a point of view that what policies we implement, what kind of investment styles we have, we thought we'll cover and give you key points. One of the key points, if you look at, is very, very important is that how do we preserve capital? I think that is something at the foremost of all our strategies. The capital should be protected under any circumstance. So even you look at the way we have behaved for the last 6 months, we are able to protect our capital in spite of the market turbulence. I think that has worked very well for all of us. Another key important aspect is how do we take care of short-term volatilities and look at long-term performance. So effectively, if I look at our returns having more consistent, the areas what we cover, the kind of companies what we get into, anyways, in due course, we will understand how things are moving. We also look at how do we generate alpha in the market, bring contrarian view, but at the same time, we remain active. At the same time, we have patient investing for a long-term strategy as well. Let me start in terms of what we do. We have a unique strategy in terms of long short. So typically what we do, we look at certain event-based things, which are short-term plays, and we look at certain long-term things, which are fundamental plays. So in terms of selection, we run our proprietary models. We have qualitative analysis, we have quantitative analysis, where we look at promoters, meet clients, go to their factories, understand what they do, how they do, because that's something which is at the core of our understanding. One of the key things, what we also look at, how do we diversify? We don't believe in too much of diversification. We do a balancing where we do a risk managed return. At the same time, we bring in a diversified portfolio as well. The idea is that we don't pick up maybe more companies from one sector. Sector-wise diversification is there. Company-wise diversification is there. One of the key aspects what we do is we are sector agnostic. So we don't get into a particular sector. We try to cover. We depending on the market conditions. We move ahead, do a healthy mix. Say, for example, IT was in flavor in 2020. Then the favor was more in terms of the IT side. Then came in the time of power. Then came the time of railways and defense. Now it's a time of consumer. In fact, in due course, you'll also get to hear from us. So our idea is more in terms of how do we get those stories right? How do we get those opportunities right? And one of the key things for investing is how do we get those sectors right? Because that will be key for investment and money making for all of us. So this is a very, very important slide where we talk about our key strategy for the fund. So when we launched this fund, we did some market survey and realized that there's a gap. So there were funds for long-term investing, which are only long only. There were funds for special sets, only in terms of targeting a certain IRR. And there were funds which were for unlisted, which were primarily focused on unlisted equity, but they had lock-ins and they were huge gestation periods. So there was no fund which talks about which can combine these three into one at the beginning. So we targeted that, and at the end of the day, we launched a Swyom India Alpha Fund in September 23. So this fund takes care of in terms of long-term investing. This fund takes care of special situations. This fund takes care of the unlisted equity in the market. So how do we do that? So primarily about 50-55% of the portfolio, we try to invest in long-term investing where we get into multi-cap. So effectively, what do you mean multi-cap here? We talk about medium term, we talk about long-term holdings, we talk about small cap, mid cap, large caps. And then we get to special sets where we're talking about more in terms of QIPs, QIBs, open offers, delistings, participating in the IPOs. So that's something which brings a special set for all of us. This is a very quite active set where we get into multiple stocks. The range in terms of what we hold the stock is about 1 to 12 months, depending in terms of what we do. So this helps us to capitalize on the opportunities available in the market inefficiencies. For example, we get into open offers where we try to get into open offers announced on the public market. We also try to capitalize in terms of any opportunities available on the IPO side, pre-IPO side. The third portion of our portfolio, which is very unique, is unlisted equity. Again, we try to focus on companies which are about to get listed in about 0 to 24 months. The idea is more in terms of getting into companies creating value for the investors. But the whole piece is that we also like to keep our fund liquid. So we keep only a certain portion of our fund into unlisted equity, which is about 15 to 20% right now. So the thing what we are looking at is it's a unique combination. Swyom India Alpha Fund actually takes care of long-term investing, special sets, and unlisted into one category itself. So category 3 allows us with the flexibility, and we were able to deliver a product. The returns I've shared with you, the way the fund has topped the rank number 2 last year, and even current year, the way things are moving, fund is able to do well given the market uncertainties. We take you forward in terms of what is our holistic approach, the risk management framework for our fund. So again, which I pointed out to you earlier, the fund is sector agnostic fund. We don't invest more than 15% in any one sector. We invest in companies with high potential earnings, with corporate governance. We try to figure out companies which can deliver twice the earnings in maybe the next 3 to 4 years. One of the key things what we look at is about being multi-cap. One of the areas what we look at is we don't look at in terms of we are sector agnostic, we are market cap agnostic. So for example, today if there is a small company or a micro cap, we are able to deliver good returns. We are able to look at the good governance in the management. We identify those companies and pick up those companies into a part of our portfolio. Overall, if I look at the way we look at the listed equities in our portfolio will be about 70 to 80%. Unlisted will be close to about 10 to 20%, depending on the strategy going on the market. If I look at a concentration and the way we look at, we don't have any stock which is more than 10% in our portfolio. We'll typically have a 15-20 holdings in our portfolio. Special sets will be anything between 4 to 10 holdings. Unlisted will be about 5 to 10 holdings at max. The idea is to have a concentrated portfolio to get better returns, to get a better set of companies to invest in those companies. Let's look at the holding periods in terms of what we do. Long-term holdings, anything between 2 to 3 years, what we hold minimum. Special sets, the holding periods lies between 1 to 12 months, depending on the special set coming in. Say, for example, there's an open offer. It depends on the closure of the open offer or in terms of any target IRR, what we're looking at from that open offer. Let's look at unlisted equity. I think late stage companies, this also gives a lot of value. Say, for example, we picked a few companies into solar space. The IPO is about to come in next 2 months. We picked up about 7 months back. We picked up something on the data center side. The idea was that once it comes with an IPO, we can create value for our fund holders and unit holders. Here, the companies, what we pick up primarily will be more profit-making companies, companies with good cash flows and good management. I think good management is one of the key factors what we look at in terms of our framework in terms of investing in those companies. The weightages, as I told you earlier, the weightages will be long-term investing will be 50-60%, special sets will be 20 to 30%, and unlisted equities will be about 10 to 20%, depending on what we are like to do. And this is more of an indicative range. These weightages keep on changing depending on the market conditions. And even within our sectors, what we try to do is that how do we manage volatility? How do we look at the situation? Say, for example, certain point of time, the previous year, we were not okay with the market conditions. So we increased our exposure to the large cap stocks and reduce our exposure to small cap and mid caps. And rightly so, it helped us in terms of reducing our drawdowns and make sure that we are able to take care of the market opportunities. So it depends in terms of how things goes for us. So maybe I'll take this slide. This is a very important slide in terms of the way we are able to do our stock selection. See, what we do is we look at the overall set for our stock choices, do our market screening, and we use stringent parameters every quarter so that we are able to get a target set in terms of the selection of stocks. Then what we try to do is we do a deep dive in terms of business, try to do due diligence, visit the management, visit the factories in certain cases, meet the management, do some con calls. Based on that, we also identify stock opportunities in terms of what we would like to invest, how we'd like to invest, and depending on our framework, depending in terms of what we like to do, we do the balancing in our portfolio. So this again is market sector agnostic, market agnostic. So typically what happens is we get into companies of different sectors, keeping a risk management view in our mind. And in terms of exit, our strategy is very clear. Only 3 points we exit. A, where the targets have got achieved. B, the prices are plateaued and we don't expect the prices to move up further. Or the third part, which is more important, is that the weakening of the fundamentals, which means that typically if the stocks have not performing as to our expectation, or if the results are not coming good, then in those cases we exit. And then again, we try to identify the stocks. We do this every quarter, and we keep doing things in a manner which is beneficial for our unit holders. So the whole idea of stock picking and understanding here is very simple, that we get into stocks, identify those stocks, understand about those stocks, meet the management, filter it, then invest on those stocks. And as and when, depending on the risk management and depending on the target, we exit those counters. So this is a typical investment cycle we would like to follow for all our investment portfolios. This will be a bit different in terms of special sets. That will be dependent on the market conditions. That will also be dependent on the pricing. Say, for example, I gave example of open offer, where we would deliver. There was a cement company where we participated into open offer cycle. So that helps us to also create delta and alpha into our portfolios. So let me come, this is more like a summary slide, that why do somebody would like to invest on Swyom India Alpha Fund. One of the key things is that it's a unique blend. First of all, let me just look at in terms of how the management of the fund works. The management has got a business background. I have worked with large companies. So there's a background in terms of business acumen and professionals. So the whole mix of professionals who have ran those companies, successful companies in India, and people from the industry coming together and creating value. I think that's a very, very important tool where we are able to create a difference. The one piece what we look at is that we have got a multi-strategy. So multi-strategy here is that it's a healthy mix of compounding stories and opportunistic bets. So normally you don't get a combination of these two together, and we have coupled that with the unlisted side of the story as well. So if you look at, that's the first area where we differentiate ourselves with other funds. And our reflection last year in terms of our performance also talks about it. Second area is that in terms of how do we manage the capital side, multi-cap side of the story. Here we are looking at an optimal mix of large, mid, and small cap companies. This helps us in India to identify growths. This helps us in India to identify the right set of companies. This helps us to get the flavor of our growth into the economy. So that is a very, very important tool. We don't go by a sector piece. We don't go by more in terms of the size of the company. We go by the value the company can create for the shareholders. I think that is something which is very, very important. And a lot of companies we have picked up have created a lot of value, and they're going to create value in future as well. Let's look at third piece, which I have talked about, is being sector agnostic. That is something which helps us a lot. We are not focusing on one sector or one area. The idea is that wherever we feel value and where you feel value can be created for our unit holders, we go and get those sectors. Say, for example, if you look at the markets, the way the markets have behaved in the past, the markets tend to look at certain sectors which are positive. Say, for example, now we have got the budget and we have got the consumption theme coming in, where the government wants consumption to move on. The banking has got very strengthened. The banking and NBFC sectors also look very promising. So we will not be we will not stick to maybe the old sectors which have done well in the past. We'll also try to explore newer sectors coming in and identifying the right set of companies within that sector. One of the key things what we also looked at in terms of maybe hospitals and diagnostic. Medical tourism can also be a very big sector what we look at. So we don't restrict our choice of companies. We don't restrict our choice in terms of what we are going to do. We don't try to get into companies, into sectors maybe which have been performing in the past. We also try to pick sectors in terms of which can do well in future, because that's equally important in terms of any equity bets. It's equally important that we get and understand those companies, understand those sectors, and we are able to create value in those sectors at all. So that's very, very important. The fourth piece, what we pick up, is hedging the risk. The way we have structured our portfolio, I think that's the biggest hedge what we do. So we try to get into multi-cap strategy. We try to get into sector agnostic thing. We have a 15%, 16% coverage on maximum on one sector. What we also try to do is that how do we minimize the risk, and in a risk-adjusted manner, how do we create value for our unit holders? I think that's something which is very, very important for us. And what we mentioned in the earlier thing as well, that return of capital is very important than return on capital. That piece, that's the core of our strategy in terms of any investment. We don't want any capital loss coming into our fund, and we try to hedge the risk at the maximum level which is possible. The last and but not the least is focus on fundamentals. So our thing is very clear that we don't get driven by more in terms of any market exuberance. We try to figure out fundamentals of the company. We try to see whether how the company is doing, what is the process they are following, how the management is doing. And based on that and a solid business mode only, we choose our companies for investments. So if I combine this 5 into 1, that's something what we offer to our clients in terms of Swyom India Alpha Fund. That's the reason we are able to differentiate ourselves vis-a-vis other products. And that will also help us in long-term sustained wealth creation. If you look at our clients, what we have, clients will be senior corporate employees, there will be clients from family offices, there are clients who are NRIs, there are clients who owns businesses in India. So there are various people who are looking at long-term wealth creation. This is a very clear opportunity where we look at our business models, where we try to look at specifics for a particular stock to stock, and where we try to create value for all our investors. So this is, in fact, if you look at, this is a key area and key slide in terms of what we are trying to cover for our investors, what we try to see, how best we are able to manage the modality, how best we are able to manage risk for our clients, and being sector agnostic, being multi-cap, being multi-strategy, hedging the risk and focusing on fundamentals. I think we are able to combine this 5 into 1 as a product, and it will be a unique product where we are able to offer this into one client for one area for a client, one single bouquet for a client, which is able to offer him a comprehensive solution for what he's looking at in a risk-adjusted manner. I think that's something which is very good in terms of making sure that it is available to the client. The client is able to see what is happening. The client is able to judge what is happening and is able to clearly look at a long-term wealth creation opportunity. So something about Swyom, let me tell you that we have office in Mumbai, Calcutta, and Raipur. We operate from head office in Mumbai. We have about 25-member team, primarily based out of Bombay, and we have an office in Calcutta and Raipur supporting our team. So that's something which I wanted to talk with all the unit holders. What is there? What are the prospective investors? I hope I'm able to give a perspective in terms of what's there for us, how we are going to run our piece, how we are going to move forward. And let me speak to Devanshu in terms of if he has anything particular to ask. This is a disclaimer which we normally provide for investors.
Yeah. So the first question from my investor community that they would like to understand what is the market outlook. You would like to present it to them. And how you are, managing at the same time your fund as well. Over to you.
Thanks, Devanshu. It's a very nice question you asked me. Say, markets, you have to understand how things have gone. So the way things have gone in the market, say there was a specific correction for the last 6 months. And if you look at all the Nifty P averages are going to the bottom side in terms of 5-year averages. So primarily my view on the market is the markets have bottomed out. So here, even the budget has come in, and with the budget coming in, there's a lot of thrust in terms of consumption. My view is that markets typically there'll be change of leaderships. So market was driven more in terms of railway and defense, that side. The market will be more driven on consumptions, banking and NBFC side. Maybe in terms of that area will be discretionary consumption will be one of the key areas. And in our fund also we are going to capture. In fact, I've covered during our presentation that even within our fund itself, that how do we look at and capture those opportunities.
Thank you, Raman sir, for giving insights about market outlook. Now, as you know, there's a hot news going in market, that people are, talking about budget too much, that, what is happening in budget and what is your view about the budget. That would be a great help.
Let me tell you, Devanshu, it's a very good question what you asked first. Say, one of the key things, what is happening, this budget was a mega budget, let me tell you. It was a game changer. What has happened is a big shift. What government has done in this budget is they are balanced very beautifully. The capex, the consumption spend, and the tax spends. Right. So if you look at this, is a very, very balanced budget, focusing on consumption. How do we increase the consumption? how do we balance the capex which is happening? So, for example, people talk about the capex was less this year, but ideally speaking, it's 10% higher than last year. In fact, slightly higher. And we also have to combine the capex done by the PSUs here. We can't be restricting ourselves in terms of only the capex announced in the budget. Well, a lot of PSUs also getting into capex cycle this year. So the budget is very, very good. The budget is very progressive. And I think we'll see an impact coming in the first quarter itself. A lot of money will be in the hands of the consumer. 1 lakh crore will going to come in with the consumer. They are going to spend that money and it will have a ripple effect on the economy. Multiple sectors, if you ask me from a stock market perspective, discretionary sectors will do well. Hospitality, consumption, direct consumption, consumer durables. Those will be in areas which will pick up attention. And the growth is always will be driven that side of the economy. So I think it was a very wonderful budget. I think the finance minister has done an extremely good job in terms of putting this budget, balancing the two. And if you look at the uncertainty from the US side, also is getting taken care of with the consumption. So India will be more Atmanirbhar right now with this budget. I think that's our view. And it's a step towards Vikshit Bharat.
Wow. Thanks for giving valuable insights on budget as well. So thanks, Raman sir, for coming on our valuable platform and giving your time to us. Thanks everyone for joining over this call. I can see people in my investors has couple of doubts which I can clear them directly, which is related to fund structure. So that I will speak to them directly. And if anybody has any doubt,
whenever you need our help,
yeah, if anybody has any doubts or if they have any more questions, please feel free to reach out to us on www.aifpms.com, or else you can directly reach us at 8368586435, or you can email us at devanshu@aifpms.com. So thank you everyone. Have a lovely day ahead. Take care. Bye.
Thank you, Devanshu. I think thank you for your time and thanks for the AIF and PMS expert team as well. And thanks to Mr. Vikash also